Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 212th edition of Investdata Trading Academy live with Ambrose. I will say it's a volatile market across the globe. In our local market here, domestic market, the market is volatile. In mature market, we are seeing a volatile market of mistrend, good one for the market. You can see that in any investing environment, you must understand what is going on and at the same time keep your eyes on your chart. That is where you know exactly where it is said is moving to. When I mean moving to either momentum or trend or direction or sentiment or psychology, it will reflect on what on your chart. That is why you need to keep your eyes on the chart. The continued volatility we have seen either on the NGS or other global markets has a lot of investors reacting to one information or the other, which are an indication that price of stocks are sensitive to what for market condition or economic what activities rather than being sensitive to company performance alone, or which also can be inconsistent at times. You must understand this, that this volatility is as a result of what price being sensitive to what economic or market condition, and it varies. And this also tells you how sensitive price can react to, even to also to what the company performance or the business of that company. If you understand this volatility, it will help you to understand that any market you are trading, either you are trading equity, you are trading a bond, you are trading a commodity, you are trading the cryptocurrency, or you are into FS, you know that fundamentals and what is happening as a way of what of influencing business. That means you must keep your eyes to see where the market is flowing to. Yes, today we want to look at starting from the what is happening in the matured economy. Don't forget that all eyes are on what today on inflation data from what from US today, Thursday. But as we speak now, if you look at Asia market, I'm seeing market there is missed as we speak. Why there is missed? We are seeing that investors are still reacting to the weak economic recovery data that came from what from China, and that also is telling on what on the market in that environment. And also don't forget that the last hour or inflow of earnings also in that environment too has also have been missed. We are seeing some numbers that came from Asia environment that is good, and some also that is also bad, and that has market also reacting to that. And this has kept that market in this misdirection as to speak. Also, as all eyes are still what on US inflation data to also to keep the sentiment in the market a bit down in a low gear as we speak now. For these mixed numbers that are coming from different components in Asia has also influenced market. We are seeing some weak numbers on quarterly basis, and also those that are even releasing their full year we are seeing also some weak numbers. This is what is also affecting the especially the tech company, especially as a US restriction on some tech company also reflecting on the performance of this company. Don't forget that on Wednesday, there was saw that the government of here Joe Biden also signed kind of executive order that will block some new investment in what in China technology. Such also have like a semiconductor has also impacted on what on this sector as to speak, and that is what is going on right away in that market. That means you, as an investor, you should know that all these are happening. In the midst of all these, investors should know where if you're looking at this current time, because it's a way of knowing what to do as an investor. Once you understand all this, it's going to shape position. The pressure on this sector is also continuing because of what because of the recent executive order that was signed by the president of US. But not if you look at Japan stock I also have edged couple in the green this morning. That's why the missed numbers also that emerged for that zone and also in that region, and also an expectation of this inflation risk that will come from US the economy, knowing that we have seen that of China kind of declining for almost 10 consecutive months, and that's also the more it shows that in China people have money but are afraid to spend more because they see that price will continue to decline. That is not a good omen. Deflation and inflation has different impact on the economy, and two of them are dangerous so in any economy. That's why, as an economist or not as investor, you must balance these two. Now there's money available to this world because they are afraid of what price going down, and it has continued to dive in the south direction. That also have put China, with the expectation of that of US, people are looking at where, and this is why the outcome of this data today will determine a lot of. Also, will tell you what the Fed will be doing in the what in their next policy meeting, and you can see that also the deflation in terms of inflation in China, and also expectation of today's figure from US. We see that oil price has started cooling down despite the oil price remain resident above $87, but we see the pullback yesterday at this hour because of what? Because of this expectation of US inflation data, because they know that this data give a lot of insight to what will be happening what in the next Fed meeting. This is what I believe is shaping the market right away. And you as an investor and myself, with this I would think we should also watch very carefully to know exactly what to do in the market right away. But for me, there's no cause for alarm in this regard because we're spread that the inflation figure from US, we must see that it will stick around within what we saw in June, but a little either up or slightly flat. But we're expecting that to be around either 3.3 or 3.2 against the figure we saw 3 point in June. But if that comes, that also it will also be not a bad one. It shows that they might likely leave the rate on unchanged. On posit also, they also might do a marginal or watch to see what other data. But we have seen data from job report. We have seen purchasing manager index for the month. Now we're looking for the month index for inflation data for the month of July. This also will shape what will happening in the next NPC policy meeting in that environment. But for me, there's no cause for alarm. Like I will tell you that once you understand the reading of the market, you will flow with that trend. It gives you a lot of confidence when you are taking but when you are guessing, it becomes a problem. For those that are doing currency, even you can see that even the crypto space, all of them are shaking. They are all looking down just to see the outcome of this. To see this data, this also will be a good definer of where the market will go in. At like I said it last time again in this class about 2 days ago, that two of the MPC members in that environment are also already giving sign that if the inflation figure come as expected, flat or decline marginally again, they might likely pause. If that happens, or the rate of the change remains small, that might also be a good one for for the economy because that might likely leave a rate unchanged, and if that will also a boost for the capital market, and that and also the economy will break out because cost of borrowing will also remain unchanged for that period, and that will boost activities as we expect because we know that interest rate is what moves flow of funds from one to the other from one instrument to the other, and also stock valuation will also continue. Currently, as we are looking at, people are looking at long term positioning on the average. Some are looking at the economic reality, and all this also far below what they are looking at. If they are seeing expectation that is going this will take the market to the next level, we're going to see activities changing. And I believe that that's why today's figure will be very, very important to both not only international, both local here because down here so all our eyes are still on we're expecting actually our own inflation data by next week. This also will give us an insight what we're likely to see. We have seen the one that came from our neighbor here in Ghana yesterday. Really first they hit almost 41 point something, and I'm surprised that our monetary policy team are already comparing our the one that came from other African countries with our own. They should know that we are different. Let them focus how can we reduce, take other measures to start working what will reduce the inflation. We have seen that yes, we cannot manage inflation right now because of subsidy removal, estate unification. But what further can they do to make sure that we start seeing a slowdown in inflation really because all the impact of rate hike have not reflected on our own inflation just slowing down. Rather, we are seeing it jumping, which we understand. But now it's now done on the monetary policy team to start thinking that how can they start what else would they do outside the monetary policy, either physical or other things that to make sure that we start seeing rates coming down. If all these palliative are also put together, we start seeing vehicle people start moving their goods from their farm, but the number of vehicle and I think how they can make it work. I think it's about the reform we're looking at, putting all the economic team together. Let's see what will happen in the economy. But I believe that that's what not just comparing our own with Ghana, other African countries say that we are better off this one. No, you don't need to give yourself thump up at this hour. You should know what we are going through as a nation. We need to expand the economy. We are the giants of Africa. Let's set the example. Let everything in Nigeria turn around. I see that it's possible if we can, have that will and at the same time take the right step and be consistent with our policy, is likely to be achieved down here in Nigeria. But if you look at what is happening in Europe. For me, Europe is also opening on a stronger note, extending the gain it had yesterday, which is also for me is a good one. Open on a stronger and a brighter mode. Also, as investor in that environment, continue to digest the more earnings that are being released to the market ahead of today. I've been saying it today inflation figure in that environment, and this inflow of for the last batch or last inflow of earnings has also changed the market there, because we are seeing now on this last batch, despite from business sector, we are seeing a mixed number. While those that are posted positive number is also reflecting on their price, which also having an impact on the indexes in this market. And that's why we are seeing that yesterday it was in green, today it has extended it, despite the news of Mundi downgrading some banks in US. I see that the last 2 days that changed that Mundi news has fall off. That's why market, you need to understand the market, that market reaction is what shape activities and also information that come. Like I tell you, Lord, before I started, that volatility, is telling you that if the market or the price of stock react more, to what is happening there, in the market, and also what is happening in the economy more than what is also happening in the company. Sometimes it can be consistent, but you need to understand what that is volatility is, what is happening around, and how investors are able to digest it and also take action immediately, or what the next step taking, to address that issue. This is what you need to look at any given time when you are trading. You must understand all these, because these are the things that will form what you see in the chart, because you must understand the sentiment and also where everything is going in terms of activities of the people or the players in the market. Once you're able to get that graph, you are good to go as a trader or investor. And don't just stay here because you are seeing a negative move in the market so that you start running. No, you must also see what is the what is happening and what direction is it going. Once you're able to get that clue, I tell you, you are good to go. But once you are just panicking, it doesn't mean that you don't have plan to trade, or you are just in the market without understanding. And that's why this class and other class are very important for us to always share knowledge, so that you understand what is happening in the market and trade or invest with confidence and with knowledge. Having your plan and also trading your plan, it is very, very important. One is to have your plan, and one is to trade it. There are people that will carry plan but they're not trading it, moving with sentiment, fear, and greed. But once you have a plan, it will guide you, to take the step to take and not to take. But when you are not trading your plan, you'll be tossed up and down by the market wave, which I don't like any of us in this class to experience such, because it makes you invest with fear and also without knowledge, and which I'm not happy, which I won't be happy, or I'm not happy seeing you, in this class, panicking for market direction. You must know why it's moving that direction. You watch all your indicators, know what is happening around you, then you now know what. Don't just that you are jumping out of fear, you're coming back again, you have incurred cost going now. But if you see that the trend is still very, very much that on a long run, medium term, you know what to do at that time. Yes, coming back to US market, US market also has extended yesterday when they had a missed performance. Two indices was down yesterday, one, but this morning we're seeing that all indices are still up at this moment, in that market as we speak. It tells you know where the market is heading to, despite the fear of the banks that were bought yesterday. We saw that it was a mismarket, but now we're seeing that the market is banking back, but no powerfully, even when all eyes are what on the consumer price index for the month of July. It tells you that investors are looking at this data. If this data come and it comes as expected, we might see that the market might extend because we are seeing performance of companies in US. They've done excellently well, even more than the average of 10 years performance for this period. And this period of also there was like if that number there's liquidity to respond to this number, we might see an up market. But if we are seeing a such number and it's not moving, stock is not moving, then that there is something pulling down back, which I said yesterday. What is happening, in terms of the opposite market, which is the bond market there, and also the inflation figure because of oil price crossing $80 and that remain above almost $80 for a long time. That might also kind of impact on prices to go up. These are the fear. But if this data comes today and it becomes clearer to all of them where they are standing, that will also be a plus for the market. Yes, for me, that is for US market. African market yesterday also was missed, but this morning African market is still also missed. We are seeing that NGS is gradually coming up after that opening the green. The oscillation has continued, but as we speak now, want to look at what is happening on the NGS now right away, so that we understand how to trade our market right now. As the market is is on. Market is slightly in the green, going up and down, and as usual, because we saw that markets were marginally down day before yesterday. Before we saw the life of Dangote cement pulling the market down yesterday as a result of what sell off in the stock, and others like GTB and UBA, they saw a little pullback in those stock yesterday. This has also changed the trend as to speak. For that, investors are looking at how can they go from here to know exactly what to do with their position in the market. Costs have been coming, but I'll tell you that there's no cause for alarm, because we are seeing that the market is waiting for a trigger, and that trigger is either in terms of positive new policy direction or the turning of the new ministers. If they are signed a portfolio any moment from now, I believe that also will be momentum for the market. But once that we should look at what is happening in the other market is very, very important. As we speak now, I'll tell you that all the government bond so far between 2025 to 2051, I'll tell you that they are all below 12% yield. And yesterday we saw that the treasury bill or primary market option also pulled back again yesterday to around we saw that the 91 days has gone back to around 5, and why the 182 days has gone to about 5.9, and the 300 days has also come below 10%. You can see that if all these are slowing down, and we are seeing that the inflation figure for the month of July, we're looking at to go above 23. You can understand what it is. No matter what it is, I said between all the government bonds between 2025 to 2051 that are below what 12% yield. Why that of corporate bonds, as we speak now, between 2026 to 2031 are also below 17%. As with the highest so far in the corporate bond is the Access Bank perpetual bond, which is the Euro bond, that's around 16.16. I'll tell you, as an investor, no matter what you're getting this bond, look at how you can, for those that have a free fund like the bank, they can do such investment. But look at the environment where you're operating. It's very, very key. Look at the reality around you. If your inflation is hitting almost 23% and you are targeting an investment of 12% or 11% down, I will tell you that you are still scratching the bottom, because you are already in a red return in terms of inflation. That's why you need to look for how can you hedge against inflation, which is also looking at the world of stocks. Those stocks are see that a day there's a stock that can give you 10%. I agree with you. Yes, you might see that dividend yield for most stocks are below 10%, and that is why, because prices have gone up. Also, if the companies on this, if companies on this can also increase their payout, because if companies during the inflation period are making more profit, prices are going up, and also to pay higher dividend, that will also match with the yield that we are seeing already in the market. If I have 10% yield in dividend, and we are seeing also now that the treasury has come around there below 10, you can see that you are really better off, because you can also make more capital appreciation in that regard. For me, it is time for us to rebalance our portfolio and know exactly what we are doing and what we want. Not just want the market or what you want. That's why here is what here is when I say that your investment objective is very, very important. You know what you want to achieve and how you want. That's why you have your plan to trade. Now, if you want to report your portfolio, are you doing 70, 30? Are you doing 85, 15 for bond and all those stuff? You must balance your portfolio so that you can take advantage of what is happening. And also, if you come into the market again, you can also do portfolio reshuffling in the equity where you are. Are you focusing on those service oriented companies, or are looking at those companies that are into manufacturing that we have seen how well say one often have put most of the company there in red and with losses? What are you doing? It's very, very important that we note all this, so that it will help us to make informed decision as investors. We don't need to be tossed up and down by market in any regard, because you are investing with knowledge and insight, and that's why you must combine your technical analysis in any situation, in any market you find yourself, so that you can stay ahead of the market. Once you're able to do this, you are good to go. For me, that's why I said investors must up their game in knowledge, and that knowledge is what you need to stay ahead of the market, and also to navigate the market anytime, whether it's in a bull market or a bear market. Knowledge is key, and when you invest in knowledge and experience, I will tell you, you will be more on the winning side, because you are not guessing, you are not feeling bad wagon. That will help you in a long way to make good decision in the market. As we speak now, market is below the 55,000 mark, but and also below T line on come to the chart, but it's still ahead of what the 50 days moving average. And tell you that 50 days moving average is an 59 investor average. You see anywhere in the world, once you see stock either above 50 days moving, that is where you see that the institutional investor or smart money will be looking to jump in. Or if it's above 50 days, they are relaxed. But when you see in the market below 50 days moving average, then after that, those people are not in the market, especially the smart money. That's why you must keep your eyes on what on the average of the market to know exactly where the price is or where index is to know what to do with your position. Yes, come back to look at what is happening, generally in our market. Our market is already, as we speak, we are seeing that the market is also in a good shape right away. For me, despite that it's below the 50 days, below T line, but market is strong. Like I said, it's above where the 50 days moving average. But we want to look at what is the market doing now live right away. Yes, market is still marginally in green, which I know. Yes, we worried that market had pulled back yesterday powerfully about 1.75 yesterday. But at this hour, we're seeing that the trend is changing, but not as sharp as what we saw yesterday. But for me, it tells you that it's a good sign that people are still taking advantage of what they pull back, to take a position. I call it a bargain opportunity. And also the pullback for me is a strong one because you can see that it's almost take off the first 1.5 to 1.55 market gain before it starts trending. Night I pulled back below it yesterday. It said that confirmed a real pullback that creates opportunity for those, but especially this one is influenced by what a few individual stocks that are highly capped or highly priced stocks. That means you also apply wisdom when you're taking it. Look at sectorial, sectorial what indices. As we speak now, market is at 64,181.99, up by 14.60%. Market is still gaining around 0. Around 0.0, no 0.01, not up to 0.02 right now, but still in the green now. But if you look at the market breadth also is positive. We're having a 12 gainers against 9 losers as we speak right away in the market. And I can tell you, out of the 9 losers, the top loser now is Tantalizer. You can see GSK there. Also, Wima Bank profit taking. You can see Cheap PSC and and Regency Regency Insurance or Regency Insurance. These are the top 5 no losers. No, I come again. Tantalizer, no GSK, Wima Bank, GPSC, and Regency Insurance. Then, if you look at the top gainers as we speak now, Square is the one leading now with 9.3, followed by Cabaton. You can see Cornerstone Insurance, Universal Insurance, and no Soon Assurance. Soon Assurance. These are the the gainers right away. And don't forget that when you see that insurance stock or local stock are dominating the market, you can see that that's why I see insurance sector as the important for every one of us. That's why the market will jump because people are already designing that what we are seeing in their numbers is a clue where they are going. Gradually, people are building up to to start operating at this low price because once their earnings start coming and their dividends start looking up, this price will be a thing of a past. So that if you are a medium and long term investor, you know how to take some of these local stock to put your portfolio and know why you are there. Don't panic out, especially if the company earnings remain consistent and looking up in that direction, so that it will guide you to know exactly what to do as you speak. You also have this at the back of your mind. Yeah, look at the in terms of volume or activities. We are seeing that FBN Holding is leading, trading about 23.83 million shares so far at 17 naira tankable. Also followed by Fidelity 1770, 11.1 million shares traded so far. UBA is doing 1450 right away, 9.4 million shares traded so far. Also Zenith Bank 3525, strong, this very strong resistance level here or strong support level. 6.74 million shares, and the Transcorp is doing 3 naira 61 kobo, 4.6 million shares. Yes, these are relatively low volume. You can compare to what we are seeing 1 million 1 billion share traded so far. We are also seeing 900, 800, 700. But recently, we are seeing low price, low volume traded. It tells you that market is still very, very quiet and also waiting for what? A trigger, either a positive news statement or policy again to drive the market. But I tell you what the market is doing, that it says the market is very, very solid at this level. And also one time to let us know that yes, despite what is happening in West Africa, don't forget that our market at this level have been supported by what local investor, international investor, and also if you look at the outcome of the seminar that we had yesterday, where SEC, NGS, and PENCOM come together to dwell more on this security lending. Before now, even when we introduce different products in our market, we have not seen the impact. Before we have the work of market makers, What market makers have not enough capital to make the market because it was not a bank back market capital at market makers at that particular time. But now we are seeing that the SEC and NGS and the PENCOM are coming together to talk more on this security lending, what I mean that if they come up with a workable plan and see that knowing that Pencom has a lot of acceptance of money, if that can come, we start seeing it will also going to help the market to become more active. We expect to see this. These are the things that we expect to change the face of the market. In all this, you must have plan your trading and at the same time follow the market. Don't just invest and go and sleep. Yes, we are coming backward to see what the chart is saying because the chart is very, very important to us anytime, any day. Yes, I can tell you that you can see where the market is going now. First of all, look at the direction of the market, especially you come to see after the market has trend at this level, try to keep up with some of a markup, put it was trending, but you see a pullback yesterday. But as to this hour, market is flat at this point, marginally here, it has not extended down, but trying to resist decline at this point again. I hope you can see that this is a strong support level, this black dollar, and that is where it's getting now. Yes, if you break out this strong support level here, let me draw the line so that you see what I'm saying. There's a strong support level here. At this point, look at where this black line here, that is where the tested before go back. That will be the strong support level. Now, once you get there and break out that level, it will come another until market breakdown. Yes, market is already on a decline phase because breaking below the T line. But once it break out this strong support level I drew here now, that will also help you to know that market is on a downward. If market reverse at this point, and we're targeting also this will be the first resistance level. Once able to break out to be the next resistance level will be at this one. But if market reverse at this point now, here will come the next resistance level that you want to watch. You can see that it is this one, stronger, no candlestick that take the market up here first and then now another one down. We want to see. At times you might say this is a double bottom, but until confirm what is doing there, you go over there and confirm. But I will tell you, almost the same level they are now. You have to keep all these things in mind when you are watching your chart, and it's very, very important that we know all this. Now you can see that another resistance level has come up here. I want to draw the line so that you understand what I'm saying. At this level, it's another resistance level. Okay, and see, and the bigger is this here. Fine now. Wow. This one will be what the you can see is the stronger and the the biggest or the stronger resistance level that we should watch. This is the minor one. Once you break out the reverse here, but you can see that we have a strong support level here. We have one here too. You can see the first one is at this point. The third here is a strong support level. The next one will be where the line is now. You can see that there are different levels you want to watch, and what you're watching, watch also the level of volume that is also coming with this trade at this level. We quickly look at let's call up our indicators to watch the market. So it will it will become easier for us to know what we are doing here. Let's come back here and call up our indicators. D here up, call our money flow user, call our what our T9, 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 T9. Good. Yes. Fine. You can see from our blue line here that the market is below the T line now, even as this guy trying to side trend here or trying to resist the decline here, drop flat at this hour. You can see it here, but still the market is about on below the T line, and the money flow is still looking down almost getting to 50. You can see now. That means because of this pullback here, so that market move from almost around the 66 down to almost 50 something. You can see that money left the market is because of profit taking and sell off in highly priced stock. We are seeing that activities this morning is still flat, but let's watch and see where the market is going. Already, if you look at this histogram here, that you can see a longer histogram that market also started descending, and you can see what we call a bearish divergence. You can see that the price is coming down and momentum is also coming down. For me, it's a sign that yes, market is on a weak side, but there's no cause for alarm as far market has not broken down the 50 days moving average. And at the same time, we are seeing that all eyes are on the expected earnings from the first year bank, which I said yesterday. If first year bank can change their policy in terms of growing their payout for interim dividend, that will give an insight to what we expect at the end of the year. But now look at the different time frame. Now we have seen where the market is going. This is a daily chart we are seeing. Look at the 1 hour chart, 1 hour time frame to see. On 1 hour time frame, you can see that it's clear here that the market is doing trading below what the T line. Okay, the pullback yesterday, you can see what we are seeing right now. The hours market has opened. You can see that it's bearish already. You can see it is the bearish state of the market. Also look at the 15-minute chart. You can see 15 minutes chart below the T line. And also go on again and look at the momentum here. At this moment, you can see it started looking up, and money flow is just coming down this 1 hour. First looking up, you can see it here slowing down a little, which you also consider when we look at at the end of the day. But if you look at the 5 minutes chart, still very you can see that MACD is still positive here, and slightly below. You can see that market is almost on top of the T line here on 5 minutes chart, and money flow is looking up slightly also to this 5 minutes chart that we want to look at. But once you consider most important, look at 15 minutes, 1 hour chart, and the day, because it's a daily chart, so that you will know exactly where the market is flowing to. Then we look at other few stocks that are really on the gainers table, so that we know exactly what we want to look at. Let's quickly look at this few stocks on this gainers table now that we can able to cover before our time is spent. But I know that you are getting flow of where the market is going and what to do, so that you won't be panicking out of your position, but rather you invest with knowledge, because that is what you need at this hour. Knowledge is key, and once you're able to trade with knowledge, it gives you a lot of confidence. Let's see what is happening. Quick one, look at those stocks that are losing. Let's see how far this we're seeing the result of Women Bank. Women Bank, we're looking at the downward trend. Let's look at Women Bank, what is happening there right away, so that we will see. This is stock that posted a positive number. No market have not reacted much to that. Yes, if you look at the 5 minute chart for Women Bank, it's not looking too good. It's also bearish. You can see sign is already here, little sign here. We need to also watch, because we have seen that the momentum have changed here. Longer one and shorter one here on the 5 minute chart. Quickly look at 15 minute chart for Women Bank. We have seen that money flow is still looking down. MACD is still bearish. Let's go to 1 hour and look at also the candlestick formation trading below the T line. You can see it here looking down, profit taking activities, and money flow is looking up. This is a mixed technical. Also seeing the momentum looking down, and while this one looking up, you need to also watch very careful. Let's look at the day chart for the stock. The day chart, yes, you can see that very clear. Look at the price action. It's also looking down. This is a day chart. You can see slightly below the T line, and MACD is becoming bullish, but not much. But why MACD is becoming bullish? We are seeing that money flow is looking down, because profit taking activities are seen the stock. You can see here on the chart very clear. Yeah. Then another one that is of my concern is, let's look at what is happening in Chi. We are seeing that Chi is dropping. What is happening there? You need to know, because you are already in that position. If not, you want to enter, it will guide you. Let's see what is happening in Consolidated Hallmark Insurance. Consolidated Hallmark Insurance. This is the chart of Hallmark. You can see that the stock, for me, even this morning, we are seeing a positive sign that want to come up. Let's see, but it came down again. But I can tell you that the MACD momentum is showing that acceleration of momentum here, but let's still wait and see. But once it tested the thing, like a breakout with that will perform a good sign. And don't forget, I said this company will expect to see what they are into dividend and corporate action any moment from now from this company. That means we need to keep our finger crossed. Let's look at 15 minute chart for Chi. Chi 15 minute chart, it's not looking too good. It's not looking too good. We're seeing that it's still bearish here in the 15 minute chart. We quickly look at I've seen the 1 hour already. Yeah, this is the 1 hour chart. The 1 hour chart is fair. You can see that can see the last 1 hour. You can see project taking here but until break out the T line, that is what we said. There's potential for the stock to go higher. But with our expectation of entry dividend, corporate action any moment from now, we expect to see this price go up. And for me, because the company earnings have been consistent, we have been consistent. Those that are taking advantage of low price stock, the insurance company can also hold their position in this stock for the future. Yes, because of our time, this will be the last one we chatted. Then tomorrow we'll continue, and I'll say thank you for your time. For those that have ordered for the new material, say thank you. As you also watch, let us get feedback from you, and also you can make comment of what you want us to do more in the next videos, and also how we're also going to change your investment. As you watch and take action, give us update. I say thank you for those that have subscribed or those that have paid for the new video that's out. I say enjoy your trading day. See you tomorrow. Bye.